Right now, a single indicator is flashing a signal that we haven't seen since before the start of the last crypto bull run back in 2021. And before that, this same exact signal flashed in early 2017, right before the insane bull run that we saw later that year. Very few people seem to understand this indicator and what it means for crypto as well as global liquidity as a whole. By the end of this video, you'll understand not only what this indicator is, but how it works, why it works, and what it's saying for crypto and the wider markets as a whole is coming next. The indicator, of course, that I'm talking about is the DXY, or dollar strength. And dollar strength is one of the most powerful predictive indicators when it comes to predicting where global liquidity is going to go next. And if you don't know, liquidity is like the lifeblood of all markets. The more liquidity that you inject into the global financial system, the higher that markets go. But this is especially true when it comes to crypto. Crypto is like extra sensitive when it comes to moves in global liquidity. Meaning when you have global liquidity go down, like what we saw in 2022 and like what we saw in 2018, this causes crypto prices to absolutely plummet. But when you have global liquidity go up, like what we saw in 2017 and what we saw in 2021, this causes crypto prices to absolutely go parabolic. So knowing what global liquidity is going to do next is a powerful predictor of what crypto is going to do next. And the DXY, or the dollar strength index, is one of the most powerful predictors of where global liquidity is ultimately heading. When the DXY rises, this means that the dollar is gaining strength. This means global financial conditions are tightening. It means it's now harder and more expensive for countries, companies, and investors to access dollars. And this drains liquidity from risk assets like crypto, equities, and emerging markets. When the DXY falls or goes down, this means the dollar is weakening. This means liquidity is improving globally. This means investors are looking for better returns in riskier assets, and it often is an early signal that crypto is going to go a lot higher. And let me show you what I mean. Let's go back to 2017. This was President Trump's first term. And going into the election, we saw the DXY absolutely skyrocket. And this means dollar strength is going up. And this is typically really bad when it comes to risk assets, when it comes to crypto, and when it comes to markets, liquidity, etc. It basically means a retraction in global liquidity as liquidity flees to places like the US dollar. And you can see we went from around 94 all the way up to 103. So this was just absolutely insane. And you can see we peaked around January 2017. And then from there, we retraced a little bit, went sideways a little bit until around April, where dollar strength fell off an absolute cliff, plummeting from around 101 to a low of around 88. And this pink line is global liquidity. And as you can see, as dollar strength was rising into the election, we saw global liquidity falling. And you can see it bottomed in December of 2016. And remember, we peaked in December of 2016 with the DXY. And then from there, global liquidity went on an absolute rampage, skyrocketing to new all-time highs. And I pointed out that in April, you could see that the DXY fell off an absolute cliff. And at that time, Bitcoin was sitting at around $1,100. And from that point forward, you can see Bitcoin went from $1,100 to a high of almost $20,000 over the next 8 months. Over an 8-month period, Bitcoin went up 1,500%. Now, you'll also notice that after 2017, we had a huge collapse in crypto prices and in Bitcoin prices. At the same time, we saw a huge rise in the DXY, in dollar strength. So, again, another retraction of global liquidity that caused a massive sell-off when it came to Bitcoin and crypto. And you can see here in March of 2020, during COVID, we once again, saw dollar strength fall off an absolute cliff, bottoming around June of 2021. With dollar strength staying relatively low until around October of 2021 before it started absolutely skyrocketing into 2022. And again, the pink line is global liquidity. And you can see that in March of 2020, we once again started to see global liquidity absolutely skyrocket, going up all the way into early 2022. And again, March of 2020, dollar strength starts falling off a cliff. And you can see that Bitcoin absolutely skyrocketed, hitting an all-time high in November 2021 of around 69,000. And remember, although dollar strength started rising in the middle of 2021, it stayed relatively low. It stayed down in the 90s until around February of 2022 before it started absolutely skyrocketing. And obviously, we know what happened after that with Bitcoin, where the entire crypto market collapsed into 2022, where we saw the Terra Luna collapse, we saw the FTX collapse, and across the board, all crypto asset prices absolutely fell off a cliff as dollar strength began to rise. And one last time, you can see that in September of 2022, dollar strength peaked before falling off an absolute cliff going into January 2023, which would have been a huge buy signal, a huge signal saying, hey, now is a good time to start buying back into crypto, buying back into Bitcoin, because this should mean global liquidity should start trending up. And we know that that happened in early 2023, would have been a great time to buy back into Bitcoin. Bitcoin was sitting at around $16,000 and then went on a run up to $108,000 over the next 2 years. As you can see very clearly, there's a correlation between dollar strength rising and falling and what happens next with crypto. And the amazing part of this is that it's actually predictive of what happens next with crypto. You notice that in 2022, September of 2022 is when dollar strength started falling. And it was later that year, in around December of 2022, that it was the optimal time to buy crypto. So it's not like, dollar strength started falling in December and you only know in hindsight that was the right time to buy. Dollar strength rising and falling was actually predictive of what came next. It fell and rose before we saw crypto prices go absolutely crazy. It was an indicator that came before those things, not in line with those things, which is a really important piece of information. Now, you're probably wondering, why is it that a weaker dollar is so good at determining like global liquidity and crypto prices, etc.? One of the reasons has to do with debt dynamics. There are a lot of countries, there are a lot of businesses all over the world that owe money in US dollars, but they might not make money in US dollars. For example, obviously, people in other countries typically make money in the currency of that country. And those businesses in other countries typically make money in the currency of that country. But let's say they have $10 million worth of debt in US dollars. When the US dollar strengthens, when it goes up in price, that means they now owe more money than they previously did in relation to their own currency. The easiest way to understand this would be if you took out debt in Bitcoin. Imagine when Bitcoin was priced at $100, you borrowed one Bitcoin from a friend, which was worth $100 at the time. You said, I'm going to borrow a Bitcoin from you. I'm going to go sell that Bitcoin for $100. I'm going to go use that to pay for my car repairs, but I promise I'll pay you back one Bitcoin. Now let's imagine Bitcoin rallies from $100 all the way up to $10,000. You still only owe your friend one Bitcoin, but priced in the currency you actually make money in, you used to owe them $100. Now you owe them $10,000. The debt dynamics around the US dollars work kind of similarly to that, which means, again, when dollar strength goes up, it's really bad for people that owe money in US dollars. And it typically means they might have to sell off some of their stocks, some of their crypto, some of their other assets in order to go pay back those loans because they're getting freaked out because dollar strength is rising, at a rapid pace. Now, obviously, when they sell off stocks, they sell off crypto, they deleverage. That's going to reduce global liquidity. That's going to push asset prices down. Also, when a dollar is weakening, people are less likely to want to hold dollars. So when a dollar is declining in strength, people don't want to hold dollars as much. They'd rather have that money invested so that their money could be making money for them instead of losing purchasing power as the dollar declines. Finally, when the US dollar weakens, countries can stimulate more and they can enact more pro-liquidity policies than they could when a dollar is super strong. And that's because the US dollar is competitive to those currencies. So when the US dollar is showing extreme strength, you see a lot of capital outflows from those other currencies and countries into the US dollar. However, when the US dollar is showing weakness, when it's a lot weaker, that allows those other countries to maybe be a little bit more irresponsible, maybe be a little bit more stimulative, maybe devalue their currencies a little bit more because they're not worried as much about those capital outflows because the US dollar is weak. It's not as much of a competitor in that moment, so they could do, more of these risky things without having to worry about, this big collapse in their own currency. And obviously, there's a lot of reasons these governments want to do these risky things. They want to create liquidity, especially if their economy is struggling. Maybe they need to buy more stuff. Maybe, for whatever reasons, they want to take out more debt to do whatever random government things they want to do. They want to be able to devalue their currency if they need to, but they kind of need permission to do that by US dollar strength or weakness. When the US dollar is strong, it's kind of off the table. They can't do it without, maybe collapsing their currency. If the US dollar is really weak, then they could totally do it because look at, the US dollar is looking pathetic over there. They're not really worried about it. And so they go on a spending spree and start printing a bunch of money and doing all this crazy stuff, pumping liquidity into the global markets. That's a really simplified explanation, but gives you kind of the gist of what I mean. And right now, there are a ton of countries who are begging for the US dollar to weaken so that they can start enacting pro-liquidity policies. For example, China's economy is in shambles and they are begging begging for the US dollar to weaken so that they can unleash their liquidity bazooka. Some of you may recall that they're having what some people are terming their 2008 moment, where their economy is really struggling because of this whole real estate crisis. And one of their plans to get things back on track is to unleash a huge wave of liquidity, but they're waiting for dollar strength to weaken before they can do that. I'm sure you've heard recently that Europe is also wanting to loosen their financial policy to print a lot more money. Some of this has to do with them wanting to build up their own defense. Now that, Trump is signaling that he's not going to be defending Europe, Europe wants to build up their own military, their own defense. And in order to do this, they're going to need to spend a lot of money, and that money needs to come from somewhere. There are a ton of countries who would love to see the US dollar weaken so that they could be more stimulative within their own borders, which again would massively increase the amount of global liquidity that we have in the system. And one of the biggest pieces of the puzzle here is this allows places like Europe, this allows places like China to lend more. It allows them to create more credit, and credit creates money. Credit is a form of money creation. When you lend someone money, when you use a credit card, you are creating money out of thin air. You are creating money that you don't have, that doesn't exist, and that is increasing global liquidity. So the more credit that can be taken out by businesses, countries, individuals, the more global liquidity goes up. And of course, all this has second order effects that increase risk appetite. As global liquidity is going up, as there's more abundant credit, as more stimulus is coming into the system, people get a higher and higher risk appetite. They're willing to take on more and more risk, which is especially good for crypto. So you're probably wondering, what does that mean for us today? Is the US dollar getting stronger or weaker? Is the DXY trending up or down? Well, as you can see, around September of 2024, we saw dollar strength absolutely skyrocket to a high of around 110. Since then, we've seen dollar strength fall off an absolute cliff from 110 all the way to a low of around 101. And what I find the most interesting about this is, again, during Trump's first term, his first presidency, we saw the same thing play out. We saw dollar strength skyrocket going into the election. We saw it peak in January of 2017. Then we saw it decline and kind of go sideways for the next couple months before falling off an absolute cliff around April of 2017. And going back to April of 2017, we did have these kind of similar things where it fell off a cliff, it kind of retraced back up, but it continued this downtrend all the way throughout the rest of the year until 2018. And it certainly looks like, similarly from the peak in January of 2025, the trend for dollar strength is headed down lower. And I think there's a lot of reasons to be optimistic that we could see dollar strength continue to fall off a cliff. For one, again, as I mentioned earlier, everyone wants a weaker dollar. Other countries want a weaker dollar. And that means it's a negotiation tool for Trump and his administration when he's trying to work out these deals. Secondly, you might have noticed with the reciprocal tariffs announcement, one of their big things that they included in the reciprocal tariffs was currency manipulation. Now, obviously, we know that's not exactly how they did it. It was this whole other thing. They didn't actually calculate out the currency manipulation, but they did list that on the chart. And that is something that Trump has talked about a lot, which is he hates that these other countries will devalue their own currency to make their exports more, appealing, and then export these cheap goods to the US. And at least during his first term, he was very pro a weaker US dollar because he thought that that made our goods and exports look more attractive. And he again wants to reshore more manufacturing within the US. So it feels like everyone across the board wants a weaker US dollar. Also, lately, Trump has been kind of crazy. At least that's how the rest of the world is interpreting his behavior, which means maybe people are less confident in the US dollar going forward because they just don't know what Trump's going to do. You have the fact that it's seeming more and more likely that we're going to get more rate cuts in 2025 than people were expecting. I have been sounding the alarm on this since the start of the year. Everyone's been saying 1 to 2 cuts. I've been saying 4 or more cuts. And you can see on Polymarket right now, there is a 55% chance, if you combine all these together, that we're getting 4 or more cuts in 2025. That is what the market is pricing in right now. Now, I'm going to share my counter argument in a second, or the case for why we wouldn't see a weaker dollar. But first, let's take a look at global liquidity. Again, global liquidity is the pink line. And you can see in September of 2024, global liquidity fell off an absolute cliff, declining all the way into January 2025. However, since January, we've seen global liquidity absolutely skyrocket. And if you actually count it out, there seems to be around a 3 to 4 month lag between Bitcoin's price and global liquidity going down or up. For example, global liquidity started to fall in September, but Bitcoin didn't really start to fall until around December or January. Again, a 3 to 4 month lag. And if that's correct, that would mean that we would start to see the uptick in this global liquidity reflected in Bitcoin's price around April or May. Now, of course, some of you guys are probably wondering, what's the counter argument to what I'm saying? What's the case for actually a stronger US dollar, not a weaker US dollar? First off, you could make the case that a stronger dollar would be better when it comes to inflation. Basically, when the dollar is stronger, that means when we buy other people's goods, they're cheaper, aka that's a reduction in inflation. The second reason you could see the US dollar getting a lot stronger would be if Trump's tariff plan really pays off. Like, let's say this causes a massive economic boom. Factories are somehow building a lot quicker here, and the whole US economy is just absolutely taken off, and the rest of the world is just collapsing. That could cause a stronger US dollar. To be honest, that just doesn't feel very likely. My personal take is whether it's, Trump really was just using this as a negotiation tactic or not, that we're going to see Trump cave on these tariffs. We're going to see the Fed cut more than expected, and we're going to see dollar strength weaken throughout this process. I've said it before, and I will say it again. I believe we're going to end this year a lot higher than we are now. I believe we're going to hit a new all-time high in Bitcoin's price before the end of this year. You probably think I'm crazy because right now is peak fear and everyone else is telling you that we're going to absolutely collapse, the whole world's going to burn down, etc. Except that's what everyone always says at the bottom. At the bottom, hysteria is max, fear is peak, and that is usually the absolute best buying opportunity. I'm seeing a lot more upside from here than I'm seeing downside, and I'm going to be keeping a close eye on dollar strength on the DXY to see where we're headed next. If it continues to drop, that is going to be insanely bullish for global liquidity, which is going to be insanely bullish for stocks, crypto, Bitcoin, etc. My personal belief is that we probably bottom sometime this week. The second half of the year is going to be insanely bullish, and people are going to be shocked how quick we flip from bear to bull in the coming months. If you're interested in joining the Obsidian Council, it's currently closed to new members, but you can join the waitlist in the description of this video. In the Obsidian Council, I do weekly market and macro updates. I share my entire portfolio, update every time I buy and sell. I do monthly market deep dives, weekly Q&As, and a ton more. Again, you can sign up in the description of this video. As always, none of this is investment advice. None of this is me telling you to do anything with your money. I'm not your financial advisor. I'm just a guy who shares his thoughts and opinions on YouTube. As always, this video is helpful. Make sure to hit that like button. If you have any questions, comments, anything to add, any sort of hate to throw my way. I'm sure there's a lot of people want to throw some shade my way because everyone's just max fear, scared out of their minds right now. Feel free to drop that in the comments. And if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.